I'm Greg Hunter. Welcome to USAWatchdog.com. With us, Alasdair Macleod, a new guest. He's the head of research for goldmoney.com, but he has a long, deep experience as a stockbroker, as a banker, has his own website, financeandeconomics.org. Alasdair Macleod, thank you for joining us from the UK.
That's my pleasure, Greg.
Well, I want to start talking about the AIIB, the Asia Infrastructure Investment Bank. I've had people email me and say, "Hey, can you get somebody on to talk about this?" And you're the perfect person. I mean, you do research for goldmoney.com, and you've been in the banking and stockbroking world. What's going on with that? I mean, the United States now is going to quote cooperate, and in all the major countries, in Europe, and in the BRICS, and of course the BRICS, but other countries, even Australia is contemplating, Japan, Korea. I mean, it looks like they have all these swap facilities. What's going on with the Asia Infrastructure Investment Bank, the AIIB?
Well, the AIIB is basically led by China. To give you a bit of background on what it's really all about, China entered into an agreement with Russia, and they set up something called the Shanghai Cooperation Organization. Now, the charter for the SCO was agreed right back in 2002. There were forerunners to it, but basically, from that date, Russia and China have been working together. So you can begin to see the importance of the Asian Infrastructure Investment Bank, because it's not just China. Russia isn't on the board, it's not a founding member of it, as it were. But because they're working closely with China, they are very deeply involved with it. Now, the reason that this bank is being set up is twofold. Firstly, China wants, through the Shanghai Cooperation Organization, with Russia, to build the largest internal market the world has ever seen. It will run roughly from Genghis Khan's Straits of Bering to the gates of Jerusalem. I mean, we're talking over half the world's population. Once India joins in it, you've got India who will join, you've got Iran who will join, Pakistan who will join, Afghanistan is slated to join, and also Mongolia. Already you have 35% of the world's population in there. As for the rest of Asia, Southeast Asia, there is a huge Chinese influence in that part of the world. So you can almost include them in to the SCO, even though they're not formally members. So from America's point of view, she's losing a huge sphere of influence in the Pacific. We then come over to Europe, and you've got NATO. And the importance of the AIIB is that the NATO's members have decided that commercial logic is driving policy, as far as they're concerned, a lot more than political logic. So even though they remain members of NATO, they're all deserting the ship, as far as America is concerned, and signing up to join the AIIB. So what we have is, if you like, this new bank, which is specifically to finance huge, great infrastructure projects in Asia. I mean, we could be, over the next 20 years, be talking upwards of over $25 trillion worth of infrastructure spending. I mean, this is enormous. We're talking about all the communications. We're talking about airports, rail, road, electronic communications, electricity. The whole of the Asian continent is going to be brought up to speed. And this is happening outside the control of America. And that is really what is upsetting America. Her response, initially she tried to dissuade people from joining. She lent on very good allies, such as Australia, and said, "You're not joining, are you?" "Oh, no, of course we won't join." But of course, as soon as Britain broke ranks, everybody else has broken ranks, because the money to be made out of this infrastructure spending is so enormous. And it really is so much more important than NATO or any alliances, political alliances you have in the Pacific. So that is the background to it. Now, the latest response from America has been to say, well, perhaps you really should work with the World Bank and the Asian Development Bank. And I'm sure the Chinese will turn around and say, well, on a case-by-case basis, fine. We will consider it as and when they arise. But I don't think it's going to go any further than that. And furthermore, I don't think that America can ever join this. I would very much doubt if China would let her in.
Is this the beginning of the dollar becoming unbecoming, to cease being the world reserve currency, or at the very least having a competitor to the U.S. dollar as the world reserve currency? A lot of people think that big fireworks going to happen this fall, whether a market crash or the Shemitah on a religious basis, on the timing of that. But a lot of market people think that. You have major market players, out there saying that we don't have markets, we have manipulations. Big people you've never heard before on the mainstream media say this, who've been on the mainstream media and commented a lot. Is this the death knell for the dollar, the AIIB?
It's part of an ongoing process, Greg. I don't think it's any secret to anybody that China has been increasing the use of its currency for trade settlement. What it wants to do is it wants to get away from using the dollar as much as possible, and particularly get away from using the dollar for trade settlement within the Shanghai Cooperation Organization. It's not just a question of China is accumulating dollars. It's also a question of the fact that every bank transaction in dollars is reflected in an account back in New York. So this is something that China does not want to see. They do not want America to know every move they make in terms of trade. So on that basis, I think it was back in September last year, September 2013, so a bit over a year ago, the mayor of London was on a goodwill trip to China, taking the usual suspects of businesses, trying to get export business for British businesses and so on. And then all of a sudden, George Osborne was summoned. That's the only word for it, summoned. Come over quick, says Boris Johnson. We need you. And obviously there was a meeting took place because China at that point informed Britain that they had selected Britain to be the offshore currency base for the Chinese currency. And this is so pointedly not going to be New York. You can see the strategy evolving. And the result is that in London we have made great strides in terms of developing depth to the currency, financial instruments and all the rest of it. And the British government has even issued a Chinese renminbi denominated government bond. So, we're really on board because we see there's an awful lot of business to be gained out of this. And in that sense, I think the AIIB, if you like, is an extension of the same thing. Because remember, the Chinese do plan a long way ahead. And when they set up the Shanghai Cooperation Organization, you could see from that point which way the whole thing was going. And the interesting thing was that when I speak to Western analysts who, reckon they're close to China, they didn't really place any importance on the Shanghai Cooperation Organization. But if you talk to the Chinese, they have always placed huge importance on it. And now, of course, with the Russian involvement, admittedly not at board level, but they're in the background, the fragmentation of relationships, political relationships, the geostrategical relationships in the Pacific are also happening in Europe because, America is rapidly finding that she's on her own when it comes to policy towards the Ukraine. Obviously, the Baltic states will continue to support, and Poland will continue to support a hard line because they have got most to fear from an expansionist Russia. But as far as the rest of us are concerned, the Eurozone is in a very nasty recession. I would call it a slump, personally, if you analyse the figures correctly. And what happens? We cut off Russian business. This is nonsensical. That has been done, but you can see that with this new bank and everybody trying to get on board of it because they recognize the financial implications, the financial business, basically it undermines the relationships between America and its NATO partners. And I think the idea that we're going to be supporting further actions against Russia, that I think is going to get more and more tricky for America to make stick.
You don't think Europe doesn't want any more sanctions? They don't want any more. They don't want any more. They've had enough. I've been saying this on my show. I said they don't want the sanctions to begin with. They're in deep recession over all this. Do you think that this missile being shot off on the west coast of the United States is any kind of sign by the United States? I know you don't like conspiracy theories, and neither do I. But the timing's a little weird, don't you think?
Yeah, yes, Greg. Yeah, I mean, these things are always very difficult. I mean, we've had Russian bombers flying off the south coast of Cornwall. I mean, from where I'm sitting, it's about 60 miles away, and sort of quietly being steered out by RAF planes. You get all this sort of, if you like, pretend belligerence, sort of reminding the potential opposition that we've actually got the power to do this and that, do that. I think as far as I'm concerned, and probably as far as you're concerned, is pretty childish behaviour. But that's not necessarily the way they think in defence departments. In short, I don't know if we can really tie in that missile test with what's developing. But I suppose, if you're an intelligence officer, you say, well, there is no such thing as coincidence. And so on that basis, you proceed. So it might well mean something. But in the great scheme of things, it's not going to change anything. And I think any saber rattling is going to be completely ineffectual because, as I said earlier, the Chinese have been planning this for a very long time. Obviously with gold money, I follow gold extremely closely, and I am aware of legislation on gold as to how that was going to be proceeded in China. The original legislation came out in 1983, and since then they have stuck to this path. They have continued to acquire gold secretly, and they have now let their own population buy into gold. I mean, this was all, if you like, written in stone an awful long time ago. The Chinese plan a long way ahead. So what we're seeing today is nothing new, and I think that's worth emphasizing.
Does this mean that the dollar is going to take a hit sooner than later? I mean, a lot of people think this fall, and I don't mean to pin you down on a date, but I'm trying to pin you down on a date. This fall, could the dollar take a big hit this fall? Could they have a competitor to the U.S. dollar, or is that too soon?
Well, I think in a sense that is too soon. But I think the dollar does have problems. There is no doubt about it that there are an awful lot of dollars around the world which one way or the other are not going to have very much use. I mean, we already have the situation with the old petrodollar market. The Saudis and the Gulf states don't sell any oil, or hardly any oil, to the States now. It all goes to China. So they don't have any use for the dollar. And in essence, I think that in the coming months, it would be not unreasonable for the Saudis to turn around and say, well, henceforth we're going to be perfectly prepared to accept payment in yuan or rubles, or, well, they wouldn't be buying from Russia, but or selling to Russia. But the use of other currencies, I think, is bound to be an increasing feature. And then, of course, as that happens, you've got the problem that there are all these surplus dollars washing around the world, which naturally will try and get home. So even though the dollar's been very strong recently, and I think there's a sort of cliche that's it's the cleanest shirt in a dirty laundry basket. I would think that the dollar will weaken later on this year. And the other thing I would also say is that, like you, I have seen forecasts that the dollar and markets and so on and so forth are going to undergo a sea change, which could be very nasty later on this year. Now, if there is any truth in that, then markets actually, they forecast these things, they anticipate these things. So I don't know that I'd be hung up on it happening later this year. I think anyone who's not positioned now for the events that we see is actually taking a bit of a gamble.
Let's talk about gold. It took me a long time to get to gold. I know but the AIIB is very, very, very important. But one last thing on the AIIB. I mean, it's definitely going to not only undermine our relationships with NATO and European countries, Asian countries, BRICS. It's going to undermine our relationship. But isn't it going to undermine the dollar?
Yes, I mean, in a sense, but what I'm trying to say is that it is part of multiple processes which actually collectively will undermine the dollar. It's just the latest in a chain of things which has been planned for an awful long time. We now have another problem, and that is that there is a huge amount of debt, if you like, bank credit overhanging the market in China, which has got to be unwound. It looks like that's beginning to be unwound. Now, that's going to have a currency effect too. And China could well end up, I think, in the lexicon of the economists, exporting its deflation to America. And I think that sort of thing also will tend to undermine confidence in the dollar.
Could we just end up with a big war? I mean, could we just end up with a war?
Well, actually,
just start shooting.
Yeah, I mean, yes. I mean, normally what happens is that when you get huge, great economic problems at home, the politicians divert attention from the problems which they have been, either created or exacerbated, and declare war on someone. You could say that the invasion of Iraq was, perhaps partly stimulated by that. But the good news in this is that if I am right about the AIIB splitting NATO down the middle, splitting all those partnerships in the Pacific down the middle, then I think the potential for war is lessened, because America would find herself very much on her own. Her allies, I don't think, are going to go with her. So that's good news. That is good news, if you like.
Let's talk about gold. It's been a long 3-year down cycle in gold from the 2011 to now, and it's still going on. Even Jim Rickards says anybody that doesn't think that the gold market and all the markets are manipulated should be embarrassed. He's something to that effect. He said that on my show. So there is increasing. Paul Greg Roberts said, the debt's going up, gold should be going up. What's going on in the gold market? Why is it just bouncing along the 11 and 1200, maybe gets to 1300? Why is it doing what it's doing? And when is it going to either break down, as Harry Dent says, to $700, or break up to $2,000, as other people say? Give me your span of gold talk here.
Okay. Basically, all markets are horribly mispriced. It's not just gold. I mean, treasuries are ridiculous. Stocks are ridiculous. Everything is ridiculous. I mean, even stuff which sells as fine art, which I wouldn't describe as fine art, sells for hundreds of millions of dollars. The financial markets are completely mispriced at the moment. And gold is, if you like, is part of that. It is the other end of it. If you're going to be very confident that you can happily lend money, say, to Spain for 10 years at 1 3/4%, which basically is what you do when you buy Spanish debt at the moment, if you're happy doing that, then you can't be happy in an argument saying that gold is something that you should buy because the whole thing's going to fall over, or might fall over, or there's a chance it's going to fall over. So you can see in that sense that the absurd valuations that are given to precious metals are a reflection of the distortion of the complete capital market system.
And you're saying, just to sum this up, gold is absurdly, ridiculously low, treasuries are priced ridiculously high, stocks are priced ridiculously high, art is priced ridiculously high. Is that right?
That is correct. And it's difficult to see how this can't be corrected without some violence. What was interesting last week was the FOMC report. They moved the goalposts on the rate change from middle of this year to don't know when, sort of thing. Some people interpreted this, people like Goldman Sachs were saying, well, it looks like it's been moved out to September and all the rest of it. I mean, if you really look at it, the only way they can raise interest rates is if you have a genuine economic recovery in the States. If they raise rates without that, then all that will happen is that the banks will try and lend money to the Fed. Because what we're talking about is raising the Fed funds rate. The banks already, dealing between themselves, are dealing beneath the 1/4% ceiling on the Fed funds rate. And if anything, the interest rate at which they're dealing has been declining since 2008. From roughly, I was looking at it this morning, from roughly about 0.15% down to 0.09 or 0.1%, something like that. So you have actually had a decline of interest rates in the market. Now, this tells me that the banks are not really dealing with each other. So how can the Fed raise the Fed funds rate against that background? All that will happen is that instead of the Fed trying to successfully selling U.S. Treasuries into the market to absorb, if you like, the liquidity, which was the whole concept of raising the Fed funds rate. Instead of that, basically what will happen is that the banks will turn around and say, well, we'd rather increase our reserves at that interest rate. Thank you very much. And so they can't really raise rates without really collapsing the system. So what we must have is economic recovery for that to, for them to be able to raise rates. Without that, they have got huge, great problems.
If they can't raise rates without collapsing the system, what's the effect on gold? Why is gold not taken off? If the wink, wink, nod, nod, they're going to keep the easy money going and they're going to keep the phony stimulus going, then shouldn't gold be taken off? And isn't China just continuing to buy gold? When are they going to run out of the physical gold? And when is gold going to go up then in that scenario?
Well, I mean, the whole thing is mispriced. And we've been emptying our vaults, and the stuff has been going over to China. I mean, it was over a year ago. I interviewed one of our refiners, one of the big Swiss refiners, and he was absolutely fascinating on this subject. He was saying that he was seeing bars, and I'm talking over a year ago now, he was seeing bars coming out of vaults for re-refining from 400 ounce, the LBMA 400 ounce standard into the new Chinese 1 kilo 49 standard. And these bars were all sort of dusty and, dented and all the rest of it. They'd obviously been sitting at the back of the vault for a long time. So even then, he was saying that vaults were emptying. And, the sentiment against gold in the West is now so negative. But this is not unusual. We see this in all markets, Greg. I mean, look at the reverse of it. When we had the dot-com bubble back in 2000. I mean, the prices of the tech companies are absolutely ridiculous. That is a valuation extreme. I reckon that in the case of gold, we have got the opposite valuation extreme. And it coincides with valuation extremes of super optimism in bond yields and stock markets and high-end property and all the rest of it. So in a sense, it is, if you like, part of a cycle of human psychology. Things have been driven to a ridiculously low sentiment in gold. And the other problem is that because gold has now been out of the system since the Nixon shock back in 1971, I think there are very, very few people in the financial centres now who actually understand the role of gold. When I sort of first went into the stock market, we didn't have all these guys who came out of university with Keynesian economics and monetarist theories and all the rest of it. Basically, we were all traders, and we learned the hard way, and we learned what was right and what was wrong. That all changed with Big Bang in London back in the early 1980s. It's changed in New York as well. You don't get anyone trading who hasn't got good degrees. And good degrees basically have educated the sense of what gold is out of their brains. So it's a combination of factors. But what is interesting is that all the members of the Shanghai Cooperation Organization are buyers of gold. They have been buying gold. It's been particularly noticeable with China. I referred to their policy, which started back in 1983. I estimate that they could have, as a government and a central bank, acquired and accumulated as much as 20,000 tons over those years. Now that is a huge amount of gold.
You're saying that China has 20,000 tons to our 8,000 tons if we still, some people say we don't have it. Other people say we wouldn't be that stupid, but I don't know. You're saying they have 20,000 tons.
In various secret government accounts, I believe that is the case. And I mean, you only have to do the sums. See how much gold has been mined since 1983, between 1983 and 2002, when effectively, I think we could say that because China started letting its own citizens buy gold, it had got more or less what it wanted, if you like, as a state. So between 1983 and 2002, there's something like 75,000 tons. This is a figure off the top of my head, but it's about 75,000 tons of mine production, scrap coming out of the West, and possibly leasing also by central banks. Now, all that gold goes somewhere. we know that during that period, a lot of it went into the Middle East because in those days, the oil price had moved up from the mid-1970s to multiples of what it was. The Arabs were suddenly rich, and they wanted to put some of that money aside for future generations. And they did that with gold. The Chinese, I think, initially were doing the same sort of thing when they started industrializing in China. But after that, what I detect is that it has become more a geopolitical game, as much as putting aside, if you like, something for future generations of politicians, perhaps, rather than future generations of Chinese people. So huge amounts of gold, I think, have been accumulated, and this gives China a very good platform to be the dominant manufacturing base, industrialized base, for the whole of the Shanghai Cooperation Organization. Remember, we're talking over half the world's population in a few years' time.
Are we getting to the end game where gold is going to start pricing itself? I mean, they have the Shanghai Exchange. They have this gold exchange over there in China. What is the end game? When are we going to see some type of movement? Or what is your thoughts or fears about gold pricing higher? Because obviously they don't want it to be $1,200 an ounce from now in time in memoriam. They're buying it as an investment. I think it's going to go up. So when do you think that they're going to make a move and they're going to say, okay, time's up. We want gold to be $4,000 an ounce or whatever? I don't know.
Yeah. Well, the first thing I would say is that having observed how the Chinese operate, their style is not to go in and disrupt markets. They act very, very quietly. You would hardly know they're there. And this certainly has been the way they've handled their acquisition of gold. I don't think they'd want to be blamed for destabilizing Western capital markets. So, I don't see any precipitate action in that sense. What could happen is that if we if we set a chain of events going which leads to our own demise, then the Chinese will probably protect themselves. In that context, it actually makes it very difficult for China to make an announcement about increased gold reserves. But that announcement, I think, could come fairly shortly because, with the gold price having gone down so much, I think that there's almost a feeling amongst the central banks worldwide that it would be better if gold was steady to somewhat better rather than continuing to fall. And the reason I say that is that gold is still a very important part of countries' reserves. I don't think they'd want to see it go up very much because those who have leased gold would be worried about getting the leased gold back from the bullion banks. But in general, yes, in the longer term, it's not going to take very much of a rise in the price of gold, for example, to compensate for any losses that the Chinese might have on their US Treasury portfolio. So it is in their interest that it will go up, but I think they will probably want it to go up when they're ready for it to go up. But stepping back from China's approach to this, I think what's likely to drive the gold price higher is not China, it's not India. I think it's us. The fact is that we have sold this down so much, there's so little gold left in Western vaults now, so much so that even HSBC has stopped providing the facilities to their private customers. I think that what we're likely to see is anything that happens to change the really sunny outlook for bonds, equities, and all the rest of it, and for that outlook to swing towards risk, and then suddenly people realize they haven't got any gold, I think that could drive the price sharply higher because there is not enough gold for us to buy. The stocks are effectively very, very low, and any buyers come into the market, they're going to have to bid it up in order to get it, and they'll probably end up bidding it up a long, long way. So once it starts moving, and we could well be in the early stages of it now, I don't know, but once it really starts moving and people get the feeling that they have really missed the bottom, then it could move very, very quickly.
What do you say to people like Harry Dent? He was a smart guy, and he called this thing that gold would take a hit. Everybody was like, oh, no, it wouldn't happen. But he's a pretty smart guy, and he's of the camp that will have more deflation and that will have gold at 700 before we see, much higher gold prices and maybe even lower. What do you is gold, at a bottom, or could gold be like Harry Dent says and go much lower?
Well, I mean, we don't know. We really don't know. I mean, I was surprised that it's got this low. But having said that, I think that behind what he says has to be an expectation of an increasing purchasing power of the dollar, not just in measured in gold, but also against other things. Now, with the expansion of the quantity of dollars in circulation, and the fact, as we were discussing earlier, that China is using dollars less, it is replacing the dollar as a trade currency as much as it can. Also, we have the demise of the petrodollar. I see too many dollars around for too little demand. So what we're likely to have, I think, is an erosion of confidence initially in the foreign exchange markets, but that could spill over in amongst the general public when it comes to their expectations about what is happening to prices. And it's a sort of rather arcane debate, but if you look at what happens through the process of a monetary inflation, which is basically what we've had in spades since the Lehman crisis, you get a considerable period of time when the monetary inflation occurs and people do not expect prices to rise. And indeed, that's the situation at the moment. You have got, respected economists and presumably people like Harry Dent saying that prices are not rising, they're falling. We're actually in danger of having a price slump. That is the general expectation. But what they're missing is that the prices that they are monitoring are consumer prices set by the statisticians. What they're missing is that there's no difference between me buying something which is in the index and something that's out of the index, other than the inflation of something or the lack of price inflation in something out of the index isn't recorded. And in that sense, you have to include everything, every human activity that we get involved with. We buy stocks. What's happened to the prices there? Inflation. Oh, price inflation. Do you see what I mean? Now, at some stage, the price inflation that is evidenced in those parts of the market that are not included in the statistics will move over into those items that are in the statistics, and then all hell will break loose. With the amount of money that has been printed, with the amount of bank credit there is in the system, there is likely to be a real crisis of confidence at some stage, and it's probably not too far away, in the purchasing power of the dollar. And that crisis initially happens in financial markets, and then it happens on the street.
And if Saudi Arabia says, hey, you know what, I think we're going to take currencies other than the U.S. dollar because, China's our biggest customer, and it's kind of dumb us selling oil in dollars. Couldn't that be the oh crap moment? I mean, when everybody runs for the exits for the dollars?
It could well be.
You're saying that's a real possibility.
I think it's a real possibility. I mean, if I was a Saudi Minister of Finance, I would certainly be considering doing it. Now, whether I announce it or not is another matter. But it could be that the market suddenly finds out that they've been selling oil in yuan for some time. But this is why China wants London to develop, if you like, a nice deep international market for their currency, so that you've got all the instruments and all the rest of it. And it means that anyone who accepts yuan as a currency has the confidence that they can, if you like, offset the risk through the derivatives markets, or the market has got enough depth for them to trade it for something else. So, the plans, as I said earlier, the plans have been in place for some time, and
I think going to unseat the dollar as the sole reserve currency. That's for sure.
It's going to happen. It's going to happen. So it's not a question of if; it's just a question of when. And because markets are discounting mechanisms, I hear what you're saying about later on this year. I hear the same stories as well. And I think it's sort of based on cycle research and things like that, people looking at Kondratiev and so on. To me, that's not a good enough reason. I need to have something more tangible than something that I cannot prove, if you like.
Then here's the question, and I don't mean to interrupt you. But so, do you see anything tangible that could cause a sell-off, a crash, a calamity this fall? With the markets, global markets, with all this debt and all this uncertainty, do you see anything tangible other than a cycle?
Well, I see all sorts of tangible things, and I've seen them for some time, but they haven't they haven't tripped things up yet. I mean, we haven't even mentioned Greece.
That's right.
We've got enough time to get tracked down.
George Soros says Greece is going down the drain. Could that be a tangible trigger for some type of calamity? I mean, we are way over indebted. Even the Bank of International Settlement says we have 100 trillion in derivatives, 1,000 trillion.
We've got
has 1 quadrillion, 1,000 trillion.
A quadrillion, yes.
Yeah, quadrillion, 1,000 trillion.
Yeah.
Derivatives. That's the official number.
The answer is that the Eurozone is an accident waiting to happen. They can't actually, under the Lisbon Treaty, they can't kick Greece out. Greece has got to agree to go, and everybody else has got to agree that Greece goes. So you've got a potential stalemate there, and the idea, Soros saying that, it's 50-50 whether Greece go or stay. You can't really look at it like that. Greece are in there, and it's only when Greece says we're going that they will actually go, because their agreement, if you like, to going, it's not as if anyone else can walk away from them, let's put it that way. But then, You've seen the euro fall in recent months very substantially, and you've got bond markets there which are ridiculously overvalued. I mean, who would lend money to Portugal at 2% for 10 years? France at, I can't remember what the rate is, it's almost less than 1%. I mean, this is just complete lunacy. And so all the bond markets are completely mispriced. Their long-term liabilities in terms of net present value of future welfare costs are, they make America look actually pretty responsible. It is quite incredible, the costs that are coming down the line. So we're looking at a currency which at any moment, triggered by Greece or triggered by, I don't know, a butterfly in the jungle, could begin to unravel. And I actually think that the lack of any history behind the euro is probably the worst thing that it has. People are only used to using the euro as a currency since the year 2001, and that is not very long. So people can go off the euro incredibly quickly and recognize its flaws and suddenly decide they don't want it. So that's one area where it could happen. Look what's going on in Japan. They're printing money like, it's hyperinflation. It is monetary hyperinflation, which at some stage is going to become price hyperinflation. It's only a matter of time. So, I can't find what's good in the world. And then we look at China. China, interestingly, all the vibes I get from talking to people who are very much connected with China is that China is going to try and tackle their credit bubble. Now, I have never known a government tackle a credit bubble and succeed in managing it. The only thing I would say about China is that, not being a welfare state, the government can survive a collapse in credit bubble, and their currency can possibly survive because they don't have those, those long-term welfare liabilities hanging around their neck in the same way that America does and we in Europe do. So that, I think, is an accident that is waiting to happen. And the Chinese government, I think, they would survive that, but think about the impact on the rest of us. I mean, China is the manufacturing engine for the world. If you get a really nasty slump there, then everything starts falling apart elsewhere. And so, we have this situation where, coming back to America, back in September last year, the FOMC laid down how they're going to raise interest rates. I mean, it's a complete joke. They can't do it. So we're all trapped. And it's not going to take very much, I think, to change the valuations in the markets. And if we change the valuations in the markets and we recognize the risks in the markets, then I think that the effect on the gold price will happen at the same time, and it could be very, very dramatic.
A friend of mine says, Greg Manarino says, at some point everything's going to reprice.
Yeah.
And something's going to go up and something's going to go down.
Yeah, good way of putting it. Yeah, no, I'd agree.
Alasdair Macleod, you are the head of research at goldmoney.com, your own blog, financeandeconomics.org. Alasdair Macleod, thank you for coming on usawatchdog.com and doing an in-depth interview about what's going on in the world in finance and economics. Thank you, sir.
Greg, that was my pleasure. Thank you.